All right, good morning, ladies and gentlemen, and welcome to MacroAce with your host, Tony. I am also the head financial analyst at FinancialJuice. So let's get into it. We've got about 30 minutes until the rate decision occurs. First of all, what is it? It's the rate that the bank pays interest to commercial banks. And why is it important? Well, of course, with high rates, the attempt is to slow down growth or make sure it doesn't get too out of hand. And when rates are lowered, that is to support or create growth within the economy. Particularly this meeting, where there is expected to be a second member who would vote for a cut alongside Dingra, that being Ramsden, potentially. The dovish side of the Bank of England's rhetoric becomes more important in the expectations for when the central bank could cut rates, maybe in June or August. Also, with the rates, it affects banks handing out loans, mortgages, and credits, and so on. So where is the economy at the moment? What is the central bank looking at when they're making their decision? Unemployment rate at 4.2% compared to 3.9%. The unemployment change at 10.9k compared to 16.8k. Average weekly earnings year on year, which is also going to be quite important for the central bank engaging inflation pressures within the economy, unchanged at 5.6%. Inflation was at 3.2% compared to the prior 3.4%. Now, when the data did come out, the forecast was 3.1%, and it coming in 0.1% higher led to the pound strengthening. As the same with the core CPI data, came in at 4.2%, prior was 4.5%, forecast was 4.1%, also helping to add some of that strength to the pound off of the stronger than expected inflation print. GDP Q4 at minus 0.3 compared to 0.1, year on year at 0.2%, minus 0.2% compared to 0.3. Estimate GDP month to month at 0.1% compared to 0.2. Services PMI was stronger than at 55 compared to 53.1. Manufacturing PMI at 49.1 going into contractionary territory compared to 50.3. And retail sales year on year at 0.8% compared to minus 0.4%. And then the month-to-month retail sales unchanged at a flat read of 0%. So the key indicators that the central bank will be focused on will be the inflation data. Wages data shows that inflation in that area isn't moving or isn't seeing a nudge further down. The headline inflation CPI data, although it is coming down, it was stronger than what the markets were expecting. Hence, that led to the expectation that the central bank may take a bit longer to cut rates. Good morning, Charlie. All right, so the previous statement and rate decision from the Bank of England. So if we're looking at the one prior to that on February 1st, just to get an understanding of the change in rhetoric, on February 1st, they said the Bank of England forecast shows CPI in 2 years' time at 2.3% compared to November's forecast of 1.9% based on market interest rates. They forecast show CPI in 1 year's time at 2.8% compared to November's 3.1%. Bailey said that we need more evidence that CPI will fall all the way to 2% and stay there before cutting rates, which led to the pound strengthening. Haskell and Mann voted to raise rates by 0.25%. Now, in the latest statement for March 21st, Dingra voted to cut rates by 0.25%. CPI is now expected to fall slightly below 2% in the second quarter due to fuel duty freeze and budget. Bank of England maintains guidance from February's meeting and says policy needs to remain sufficiently high for sufficiently long. And Bailey also said that we are not yet at the point we can cut rates, but things are moving in the right direction. So in regards to the reaction from the market from that there, if we just have a little quick review. So from that data there, you had seen a bit of weakening. You had seen weakening from the pound. The central bank was seen as uh, a little more dovish. Although Bailey said that we're not yet at the point where we can cut rates, but things are moving in the right direction. Okay, so one of the things that we also need to have a look at is the expectation and sentiment of what we see from the different members of the central bank. So Dingra here is remaining on the dovish side of the central bank sentiment, or the radar. Or this is what the previous one had looked like. You had Breeden and Broadbent that were seen as more dovish in their monetary policy review. Ramsden was seen as a little more hawkish, but for this meeting, he's seen as more dovish. And he is seen, as said at the beginning, the member that could join Dingra in voting for a cut at this rate meeting. Now, the markets have already been pricing some of that that another member could join Dingra in deciding for a rate cut. Hence, with the markets and how they've been performing today, the pound did see that initial move towards the downside, but has recuperated most of its losses today so far. So it's more of a more profit taking at the moment from what we can see from the markets, with the expectation of a more dovish central bank. But the thing that could make the pound fall further or have a stronger downside reaction could be if a third member decides to vote for a rate cut, whilst everyone else votes for no change. And that could be that, although economists are not really looking at a third member to join in the rate cut decision to make it 3-6, could potentially be Bailey or Broadbent. But again, that's not really a scenario that's been presented. So the things that are unexpected, those are the movements, or those are the things that cause the markets to see more volatility. And you get to see more opportunity within the markets being presented. Okay, so Bank of England Governor Bailey and other comments too. So Bailey said on March 21st that I'm very hopeful and encouraged by good signs in the economy, but need to see consistent progress towards hitting inflation target before a rate cut. And he also said on the 16th that I see strong evidence that process of disinflation is working its way through. Ramsden said that there are likely to be bumps in disinflation process from 1 month to the next, and we can be confident headline CPI inflation will fall sharply in April to close to the 2% target. The balance of domestic risks to the outlook for UK inflation is now tilted to the downside. Hence, he's seen as the other member who would be more likely, or the most likely, to vote for a rate cut alongside Dingra. Bank of England's man said that the markets are perhaps a bit too complacent about how long the BoE will hold rates. In some ways, the bank does not have to cut because the market already is, i.e. the market is already making the pound weaker, making the job of the central bank easier to when deciding when to cut rates. So it gives them a bit of a leeway, a bit of a breather room to be able to have that time. Pill In response to Ramsden's comments about inflation being tilted to the downside, he said that CPI is likely to fall to or below our 2% target in the coming months. I'd err on the side of caution for cutting the bank rate. The lack of news gives me no reason to depart from my baseline that the time for cutting bank rates remained some way off. Off of the back of that comment from Pill, the pound had strengthened. Haskell said that inflation will stay high unless the job market weakens. And Green on April 11th said that rate cuts in the UK are still a way off as well in an interview with the Financial Times. So investment bank and market views. So today you had ANZ in their notes. They said that they expect the central bank will need to see sustained moderation in pay growth in order to gain sufficient confidence to cut rates. And we expect this to emerge in the coming months and expect the Bank of England to start cutting rates in August. You also had Goldman Sachs, who said that no change is expected. However, the market will likely focus on three aspects of communication to gauge the probability of a move in June. Firstly, the updated projections where their economists expect them to show inflation 2 years ahead in 2026 and Q2, 0.3 percentage points lower at 1.9%, given a materially higher conditioning path for the bank rate. Secondly, the vote split, where their economists think that Ramsden is more likely than not to join Dingra in dissenting for a cut for a 7-2 vote split. Thirdly, Bailey's tone in the press conference. Their economists expect the formal policy guidance to remain largely unchanged, but expect that Bailey will in the press conference signal rising confidence in the inflation outlook and indicate that near-term data will be important in determining when the first rate cut will be appropriate. From CBA, they said that the post-meeting communication and voting split among committee members will be the focus as market participants look for hints that the Bank of England is getting closer to considering a rate cut, and they expect the first rate cut to happen in September. So remember, with these vote splits, if the statement itself hasn't really changed, then luckily with the Bank of England, they have their votes, their vote numbers that they have to provide a gauge of the sentiment of what the central bank members are feeling, whether they're feeling more dovish or hawkish or looking to stay on hold. Hence, if you get a 3-6 vote split where you have 3 members looking to cut the rate and 6 looking to keep the rate unchanged, then that would provide a more dovish downside to the pound and a bearish downside to the pound. But if it is 7-2, you could still expect some dovish reaction from the pound, albeit that is kind of being priced in. And you, as said, did see some earlier on in the session, you did see some profit taking in the pound, more or less going towards flat in most currency pairs. So that's something to just be aware of how the pound has already kind of moved and adjusted itself and has adjusted to the bank rate decision already. Then from Bank of America on the 6th of May, they say that they see the bank with a 7-2 vote in favor of keeping the rate on hold. No major changes to guidance are expected. They see the bank saying that monetary policy will need to be sufficiently restrictive for sufficiently long. So more or less what's been repeated before. Minutes should show continuation of the pivot, and forecast should show inflation moving in the right direction. They expect 2026 inflation to get slightly below the target of 2%, and they expect Dingra and Ramsden to vote for a rate cut. Deutsche Bank say that their UK economists expect the meeting to set the stage for the first rate cut in June, and foresee dovish shifts in the MPC's modal CPI projections and its forward guidance. Also, if we're looking at Citi, so Citi say they expect the MPC to hold rates for a 6th time in succession this week with an unchanged 8-1 vote split. So you'd have 8 members looking to keep rates on hold, and Dingra being the outlier looking to cut rates with a risk of 7 to 2, as well as a nod, most likely in the majority reasoning, to a tentative dial back of restrictiveness in the coming months. And the timing of the first rate cut, they think it remains finely balanced between June and August. All right, so what we need to understand is that, first of all, the vote split, what does it look like? Is it 7 to 2 or is it 8 to 1? If it's 7 to 2, you get more of a slightly more dovish scenario, but as said, investment banks are pricing that in, and as markets are as well. So you may not get too much of a big reaction from the pound. But if there is a 6 to 3 split and you have 3 members voting for a cut, you'd expect more of a bearish reaction from the pound because that's not expected. And on the hawkish side, if you do get all members looking for no change, then that means the central bank is still not confident enough to consider a rate cut in June, and may decide to at another press conference or another rate decision. Markets may think that the central bank may go to August or even September instead for when the first rate cut would happen from the Bank of England. Then, in regards to what to expect from what the central bank could say, if they're likely to repeat that monetary policy will need to be sufficiently restrictive for sufficiently long, that's not really going to change the game too much, unless they say that monetary policy has been sufficiently restrictive and that's enough, or and they have seen progress towards the 2% inflation goal. That would definitely be different and provide more of a dovish outlook for the pound. The other thing to be aware of on the hawkish side is if they repeat what they say, but that if they, in the projections, see inflation reaching 2%, not in the second quarter, but maybe later in the third or fourth quarter instead. Although as said, Ramsden does expect that for a decline in CPI in the April data. So that could muddy the water as to what the central bank says in the end. Then the market pricing. So post the rate decision last time on March 21st, money markets priced in 75 basis points of Bank of England rate cuts by the year end from around 70 before the statement. April 11th, traders pair rate cut bets to less than 50 basis points this year, and traders push the first full 25 basis point rate cut to November. April 17th, post the CPI data, rate futures show investors are now fully pricing in first Bank of England rate cut in November versus September on Tuesday. 23rd of April, investors' expectations for Bank of England rate cut in August are no longer fully priced in as Bank of England's appeal speaks. So remember, he was being more hawkish in regards to the expectation for reaching inflation, for reaching the 2% goal. And then May 9th, traders appear uncertain about a June rate cut, according to money market pricing, which puts the chance around 50-50. Bets have meanwhile increased on the first move in August, with a roughly 80% probability of a 25 basis point cut and a total of 50 basis points of cuts this year. Okay, so let's look at how the last rate decision played out in the live stream that we had done last time. So if we see here, there was a little bit of downside move to the pound off of the rate data, and the statement that had come out from the Bank of England. If we kind of skip forward a little bit, see the reaction wasn't too strong. from the rate decision, and the market had already started to try and move back towards the upside instead. If I carry on a little bit more. So if you do have access to the ranges and deviations sheet, you can see the reason as to why the pound would have seen a little bit of a reaction, but it wasn't that strong. Let's skip a bit forward. Let's go here. Okay. All right. So yeah, after about what we can see from there, after about 10 nearly 20 minutes or so, the pound on, if we can see GBPJPY, that it did more or less make its way back towards pre-release levels after the data had occurred. Now the currency, we've got about 10 minutes left. Now, if we look at the currency pair that has seen the most market reaction, so as to the deviations sheet, if you don't have access to it, then I highly recommend you sign up to the MacroAce mailing list. You'll get an email on Monday to give you access to the spreadsheet that tells you how the markets have reacted to the economic releases and how much of a reaction was there. So if I just grab that link for you there for the MacroAce mailing list, which is here. Okay. As said, that gives you the access to the spreadsheet, and you also get a summary of the week ahead, what to expect for the economic releases that we will cover, and anything that's happened in the prior week, and what to expect for the week coming up, and also a link to live streams as well. So that's one email a week of a summary of the week ahead. But here we are with the pound and how it had performed at the last rate decision. So we can see here with cable, there was the initial move towards the downside, albeit. So here, let me just make this make sense for everyone. This initial figure here shows you the initial market reaction going to the wick of the candle, okay, on a 1 minute chart. This is the market reaction 10 minutes after the release has occurred. And then this is the market reaction 30 minutes after the release has occurred. Bear in mind the figures in the brackets go to the end of the candle at that time. Cheers, I've signed up a while back but never received anything. I just signed up again, hopefully to get deviation sheet. Thanks again. Send me an email at Tony@FinancialJuice and I'll get set up. I'll also have a check to see if your email is working. But looking at the largest market reaction then from what we've seen pip move wise, GBP New Zealand dollar has seen the largest market reaction out of the other currency pairs, last time around of what we had seen. Usually it's GBPJPY that sees the majority large GBPJPY that sees the largest market reaction out of everyone else. But now with the central bank in Japan looking to raise rates, that means that if the yen's going to become a bit stronger, that means that the central bank, that the GBPJPY might not have the strongest market reaction compared to what we've seen before. And I think that would have also happened for the US data. If I was looking at non-farm payrolls, let's see. Dollar yen was has still seen the strongest market reaction. Okay, let's go back to here. But last time around, the strongest market reaction came from GBP New Zealand dollar. Doesn't mean we can't keep our eyes off GBPJPY, as it historically has seen the strongest market reaction from the other currency compared to the other currency pairs. The FTSE did see some positive moves and sustained its move towards the upside after 10 minutes and after 30 minutes, with its initial 17 tick towards the upside. And long gilts were up 34 ticks, and after about 10 minutes of trading, it started to make its way back down. But here is what the sentiment was. Bank of England maintained guidance from meeting from the February meeting. Bailey said, "We are not yet at the point where we can cut rates, but things are moving in the right direction." Money markets priced in 75 basis points of rate cuts, which I've already mentioned before. But here, if they say, let's say, for instance, that inflation is moving in the right direction and they're more confident, or that they're more confident in the inflation expectation, in their inflation expectations and where inflation is moving, that could then provide more of a dovish scenario for the pound. Okay, so a 6-3 split, 3 voting for a cut, 6 voting for no change, would be a bit of a surprise to the markets if they've already been pricing in 7-2 split. If you do get a vote which is 9 voting for no change, you're seeing that Dingra has gone over to the no change side. She's been the most dovish member of the central bank. So if she's voting for no change, then that's a big shift in sentiment. That would then provide the boost to the pound within the markets, with that shift to more of a hawkish leaning, and that could mean that she's also waiting for wages and inflation data to actually see further disinflation, and for CPI data to head towards the 2% target. Whereas before, she's been quite dovish in saying that central banks need to cut rates now. So a flip of that sentiment would provide more of a hawkish upside move and a bullish move to the pound. So that's what we've got to be careful of the hawkish side in votes. If the statement itself doesn't provide anything new and is more of a repeat of what we'd seen last time, of that rates need to remain sufficiently high for sufficiently longer. Okay, so we've got about 3 minutes left. Let's close that here. Side note, consider changing the font colors used. They don't work very well together. That's I don't know if you can see that clearly. Whoops. Yeah, it might be what you're seeing on the stream. But okay, I'll consider that. I'll have a little play around with the colors. Well, let's just do a little. Got about 3 minutes left. So let's see how this. What if I did pink? Actually, that does look better. Pink. Oh, for the link. Oh, okay. Cool. We'll have a little look at that. Let's close this out. Let's move that here. Let's get ourselves set up for the markets. Okay. So remember, GBPJPY historically has seen the largest market move. GBP New Zealand dollar had seen the largest move in the markets last time round with the rate. Let's get Tickstrike set up and ready. Okay, workspaces, go to UK releases. Okay, cool. Alrighty. So, at about 10 seconds or so, I'll go quiet, and then I will jump on after the rate statement and minutes have come out, and then I'll give you guys a breakdown of what's happened and what's been said. Also, don't forget to give the video a like, subscribe to the channel, get the word out there if you found the information useful and it has helped you in your understanding of the Bank of England rate decision and what to expect. So then, the key point for the Bank of England is Bailey seeing more confidence with inflation. Optimistic things are moving in the right direction, which led to the weakening in the pound. And with you also had Ramsden joining with Dingra. So I was as expected, was starting to become more expected. Did see that weakening from the pound. I did see me take that trade. I did take two on the initial market reaction, and then a second one about halfway on that on the GP New Zealand dollar, which you'd seen there. Okay. I'll be back in a second. All right, so seeing a little bit more further down, some move on the pound, not really making its way past the initial or the spike or the initial spike. So we'll see how it kind of plays out. If we're looking at GBPJPY, kind of still not really moving too much. But as said, the key points for the Bank of England, Ramsden jumping in for a vote cut. Bailey saying optimistic that things are moving in the right direction. And seeing inflation at 1.9% in the second quarter of 2026 and 1.6% in the second quarter of 2027. So everything else was kind of expected. The point being that Bailey being more optimistic that things are moving in the right direction, and Ramsden joining in with the rate cut decision. Let's see how that goes. Okay. Also, reminder with the press conference that's coming up in a bit. So you have that at 7:30. That will be occurring. Let's see what else we got. Other than that, so FinancialJuice is where we get the live voice and text feed. You guys, of course, wouldn't hear it, otherwise you wouldn't be able to hear me, and that'd be a bit annoying to hear that in the background. But FinancialJuice, if you're unfamiliar with what it is and what it's all about, FinancialJuice provides you a live voice and text service of what's going on within the markets, all in one place, live and in real time via voice, which is here. Okay, I've just clicked that there, and text, which is the news feed that we have in the center here. On the left-hand side, you have the economic calendar of the upcoming economic releases of what to expect. And you can see here that's and the data also being in live in real time as well. At the top in the risk box here, where you should see next to market moving, you see the headlines to keep an eye out for, headlines that have moved the markets or could potentially move the markets for the session ahead. Usually for that session, going into the next session, which is in the risk box. It's put in the risk box there, so you're up to date and you're aware of what could have an effect on the markets or has already had an effect on the markets, all in one place for you to keep an eye on. So that's the key thing with FinancialJuice. If you're a day trader, it's essential to, okay, you can look at the markets and see how they react, but to know why they've reacted in such a way, and if there has been some sort of news, then that provides you with more information and power. The more information you have, the more power that you have when it comes to day trading. And there could be opportunities that are then presented from headlines, a headline that might have come out, or maybe Powell has said something, or Bailey, when he comes up later on in the session, maybe he said something that's seen as more dovish or more hawkish than expected, and that flips the direction that the pound moves in. That's why it's important to have a live voice and text feed, so you're not completely caught off guard as to what's going on and why the markets have suddenly seen a surge in volatility, or has there been a change in sentiment from a risk off to a risk on, or the other way around. Okay, so what you can do is you can sign up to FinancialJuice.com. It's not FinancialJuice.com. You can sign up to FinancialJuice. There is the light version. If you've never come across FinancialJuice or live voice and text service before, and you're unsure of how to use it, sign up to the light version first. Have a little play before you decide to subscribe. If you are familiar with FinancialJuice Lite and you've had a little play with it, although FinancialJuice Lite, there is a delay to the site, and there are adverts that are play on the light version of FinancialJuice. The pro version of FinancialJuice has no adverts. As said, it's live and in real time for you to have to be able to listen into and look at the headlines that come through in the economic releases as well. That's all live in real time. But if you do want to sign up, first of all, make an account. If you haven't made an account already, then once you've made an account, we also have our special offer of paying for FinancialJuice for 1 year at $99 rather than $1,200. So you get 92% off FinancialJuice for a year, for a year's subscription for $99 with the promo code JUICY92. Okay, so that's here that's a promo code. I'll give you the link to that page as well, which is there. Okay, so JUICY92. You can get FinancialJuice for a 92% discount for $99 for 1 year of subscription to FinancialJuice. Okay, so alrighty, let's go to some of the other things too. Tickstrike, which you can kind of see here. Tickstrike is not included, Michael. Tickstrike is a separate product to FinancialJuice, which I'm also going to talk to you about here right now. So with Tickstrike, if you're unfamiliar with what Tickstrike is, Tickstrike allows you to listen into markets, listen into how strong the buying or selling momentum is for an asset within the market. Okay, so with Tickstrike, if we're looking at GBPUSD, you can see here that there is some buying momentum that's creeped in to the markets. And let me bring up this ticker here. So this is a ticker which represents the asset GBPUSD, and it shows you how strong the buying or selling momentum is of that asset. So here we are with GBPUSD. You can see a number here says 2. What this represents is the level of sensitivity of that ticker box. So one is very sensitive to market reactions, i.e. when there's a little bit of buying or selling momentum that occurs, Tickstrike will give you a visual alert or audio alert to that. Now, if we were to drag the slider up all the way to 15, and you kind of chop and change it however you want, but 15 is the least sensitive to market reactions. So only when there's a big amount of buying or selling momentum that occurs will Tickstrike give you a visual and audio alert. So you can see, comparing it to GBP Aussie dollar or Euro GBP, where you can see tickers going off for them. On the flip side, GBP USD ticker isn't seeing any audio or isn't providing any audio visual alerts yet, because it hasn't reached that level of sensitivity for it to then, or that market volatility for it to volume, for it to then pop off and give you a visual and audio alert. Now, you may be thinking, so that's Tickstrike in its simple format. I don't understand it. There is a new feature as well, which you guys may be familiar with or may not be familiar with. But Tickstrike also has an uber sensitive mode. So if you like to scalp the markets and you're like a hardcore scalper of the markets, then the lightning bolt gives you even more, it makes the ticker even more sensitive. Okay, as I said, it becomes uber sensitive. So as I said, one is very sensitive to market reactions. The lightning bolt goes 15 levels below 1, so it's minus 15. Okay, and you can see here we're popping off a little bit with every little buy or sell bit that's going off. You can see that market reaction occurring within the pound. Okay, all on cable there. So here, it's, as I said, if you like scalping the markets, as I said, you can still chop and change, like I said, without the lightning bolt. On the normal version, you can do the same thing here on the lightning bolt version to select the settings that are right for you, whatever's more comfortable for you, what you feel works best for you. And then with Tickstrike, you can sign up to Tickstrike here with the link. So as said, Tickstrike is a separate product to FinancialJuice, but on the FinancialJuice feed, okay, which is on the free and pro version, this is the restricted. This is the trial or the restricted version of Tickstrike, which doesn't give you all the different asset classes. It doesn't go through. It doesn't give you all the different securities they can play with. It's restricted to the S&P, Euro dollar, oil, and Bitcoin. But again, like I said with FinancialJuice, if it's something that you've never come across before and you want to have a play around with it to get a better understanding, although yes, it's restricted and it may be delayed, it's still a good idea to have a little play with. It's delayed on the light version. It's not delayed on the pro version. If you still if you want to have a play around with it, get to grips with how it can be used, then have a little play with it and see what works for you, or if it does work for you, and then see how you can incorporate it into your trading as well. Okay, so that's Tickstrike there. As said, with MacroAce, we put out one email a week on a Monday, giving you what to expect for the week ahead, and also the sentiment of what's been or the summary of what's been said or what's happened the week before that, the link to the live streams and the link to the spreadsheet that they can have a look at and use. As said, that's completely free for you to have a look at the spreadsheet, and if you sign up to that, you'll get the link to the spreadsheet on Monday if you sign up today. Tomorrow at 8 a.m. Eastern Time, we have the Canadian employment change data. The Canadian employment change data, I'll provide the live stream link for that. So 30 minutes before actually 8:15, should I say, is when we have the live stream link for the Canadian employment change data. Also, don't forget to like the video, share and subscribe to the channel if you found the information useful so far, as I've said that before, so you can stay up to date with what we're doing. Let's grab it here. Where are we? Let's go back. we go. Bing. Okay, that's the link for tomorrow's live stream for Canadian employment change. Alrighty. Thank you very much for joining me live. Also, as I said, don't forget to check out the FinancialJuice if you've never come across it before. Have a little play with the light version. Although it's delayed, still gives you a good idea as to how a live voice and text service can be incorporated. Then, if you want to sign up for FinancialJuice, don't forget the Juicy92 code to get FJ for $99 for 1 year rather than paying $1,200 for a year. So you get a 92% discount, a juicy 92% discount. All right, I'll see you guys tomorrow. Thank you very much for joining me live and take care.